Hey everybody, Carl Schilling here with you. I'm the founder and CEO of the Advocacy Network, and most recently author of the Middle Class Millionaire Plan. Today, I wanted to do something that I've felt was long overdue for many, many years. I want to do a basic life insurance primer. There's so much misinformation, there's so much misdirection, there's just so much bad information, and I've seen it so long. And I'll give you a little bit about my background and history real quick. But I think that a primer is really important. So today I'm going to do that with you and bring it up here. Okay. So what I want to do, what I want to do with you today is go through this basic life insurance primer. I think it's real important that people understand truths about life insurance, why, how, when, all these good things. Okay, so let's get started on that. All right, so a little bit about my background. I was first, I got 44 years of experience, and that's been in the financial services and resort real estate business and sales coaching industries. So I've worked directly or consulted with such companies as Northwestern Mutual, Prudential, Metropolitan Life, Lincoln Financial Services, Coldwell Banker, Begin Development Company, Playground, Lennar Homes, Exit Realty, Remax, Merrill Lynch, Nightingale Conant, Tom Hopkins, Brian Tracy, and some others. Okay. I was also one of the initial certified trainers for the classic Earl Nightingale Lead the Field program, and I still actively work with a lot of coaching clients on that. I've been a member of the Association of Certified Fraud Examiners, and I'm a certified financial educator, as well as a certified NLP practitioner. I published several books, Fabulous Fortunes Through Failure in 2003, did some workshops and all talking about the concept of failure. I was a participating co-author in The Power of the Platform. That included Les Brown, Brian Tracy, Jack Canfield, Tony Alexandria, and some others. Most recently, that was a while back. You might be getting scammed when, and that was the platform piece for the Advocacy Network. And the Middle Class Millionaire Plan is out. And lastly, I've ghostwritten 9 books for financial services professionals and created content for numerous thought leaders in many sectors: tech, mining, financial investing, small cap creation, investor relations, biopharma, and CBD oil and products. So to say I've been around a corner, I guess would be a reasonable consideration. But life insurance, I started out in the life insurance industry back in 1981, and so it's been quite a ride, quite a change. But I think we start out with why life insurance. What's the history behind life insurance? What's the success been for that industry, and what's the social impact? Okay. Well, life insurance goes way back in the U.S. Okay, it goes way back to one of the Presbyterian churches. But in 1812, the Pennsylvania Company for Insurances on Lives and Granting Annuities was established. 1837, there was a financial crisis, which led to the shift from mutualization in life insurance companies. And that was a very big trigger for dividend paying whole life. Okay. 1868, accident insurance became available through life insurance policies. So that was unique. But you need to understand that the life insurance industry has survived every war since the Civil War, and it's provided financial relief during every depression in US history. I think there's been approximately 12 of those. And through all those economic crises, the life insurance industry, the companies, they all thrived, and basically banks failed. Banks still fail. Life insurance carriers don't really fail. Okay. The safest place for your money is in a life insurance company. That's just really some of the facts that people are not really familiar with. It's a simple economic risk. You lay out pennies, you transfer the risk to the life insurance carrier, and they provide dollars for your family. So, what I always like to tell clients is the way to get started is to quit talking and begin doing, as Walt Disney once said. So we got to look at the need, okay? Where's the need? There's a lot of data out now, and it shows that 42% of American adults say they need or need more life insurance. That represents a life insurance need gap for about 102 million adults. So what's stopping people from getting the coverage they know they need? Well, the number one reason is most people believe it's too expensive, but it's not really. The truth is that 72% of people overestimate the true cost of life insurance. Now, that's a huge figure, and most are not basing their estimates on reality. In fact, more than half of the people who overestimated the cost said that they either used a wild guess or they used a gut instinct. Okay. All this pricing guessing is standing in the way of protecting their family. The solution is education, better education. We really need better education. That's why this primer, okay? People do admit they lack understanding. 44% say they aren't knowledgeable about life insurance, with more than half of women, 51%, saying they also are not really fully understanding. So it all starts, the whole process starts with identifying needs. And before any solution discussion, there first needs to be a well-defined and identified needs discussion. And this is where the industry fails many, many times because agents, a lot of times, are not well educated on this. Agents don't know how to get to the core of this. And many times people end up with either more insurance than they need, less insurance than they need, not understanding why they have what they have. And therefore, it leads to a lot of miscommunication and a lot of frustration. Let's put it that way. So this is where the most mistakes are made. And most people dislike life insurance. I mean, it's very rare that someone wants to sit and have the conversation about dying, okay, or the potential of death. Some people are even superstitious about it. So it's a very, very important advocate relationship that someone sits and makes sure that the person involved on the other side understands their need, their true need. Okay. You got single needs versus total needs. Today, 85% of sales are made for single needs. We will discuss it a little bit later. Human life value is where it really starts. Okay. It was done a long, long time ago. Human life value and family income needs is where it continues. And the timeline for that family need. How long does that family need exist? And lastly, it's got to fit a budget, right? You got to help a client solve the need with the present financial situation. Let's look at that human life value. It all kind of starts in your income producing years. Okay. So you got your present age today. You are, we are today, right? Um, the end of income producing years from now till the end, and studies show that 55 to 70 years old are the highest income producing years. So that's often not taken into account, okay? Because they'll go with your salary today. You could be 38, 39 years old, 40 years old. What's your salary today? We give you 2 or 3% increase all the way up to age 65. Bang, there's a number. That's the number of potential economic loss. However, that economic loss could be way longer and it may not potentially fit the model of the real need for the family years. How old are the kids? How many years until they turn 25? Okay, so at that point, what are you protecting? Well, you're protecting future income. You got past you, present you, and future you. And I do a whole little program on that. But basically, future income is unearned income. It's money you have not yet been able to earn that your family expects to have into the future. And premature death eliminates that future income. It wipes it out. So how do you replace that future income? How does the family benefit form the income that's expected? And that's what the needs discussion is all about. Now, this is where single needs does a very poor job. Okay. The industry has been incredibly short-sighted because of the single needs. It's a lazy sale. It ignores the human life value and the total family need. Now, single need is usually for a mortgage. You'll call it mortgage protection. Someone will call you and they'll just discuss protecting your mortgage. But that single need doesn't include the income necessary for the family to survive. How are you going to continue to put the kids in school? How are you going to continue to clothe them, feed them, right? How are you going to continue with their recreational life? All those things fit into that income need, not just the mortgage. So let's say you pay off the mortgage. The great mortgage is paid off. Well, next year, who's paying the real estate taxes? How are they getting paid? How are the day-to-day bills getting paid? How are all those things going to happen for the spouse or the significant other who's left behind? So proper planning requires a total focus on the whole story, not a part of it. So we need to identify, determine what is the true need for the solution before we provide a solution. So that brings us to the thing you see on all life insurance companies. You see everyone tell you about all the different types of life insurance, okay? So basically, you got the whole life versus term. You now have UL, IUL, index UL. We're going to cover some of that real briefly, but I want you to understand that whole life insurance is permanent. That's what premiums are going to be a bit higher because the insurance is permanent. Okay. Those policies build the cash value, and when done properly, they earn dividends. That goes back to the mutual company. All right. And basically, through policy loans and through building your own bank, as it were, you can get tax-free income and tax-free money from that growth in life insurance. All right. Now, the other side of life insurance is term insurance. It's temporary. Temporary by its very nature is how long does that family need exist, right? The kids get older, the kids grow, they go to college. You've lived through it, you've survived, you've collected income. Maybe that need goes away at that point in time, right? But at the same time, you've got nothing to show for it because you did the thing you wanted to do, you wanted to live, right? Premiums are lower. There's no cash value, there's no dividends, there's no loan withdrawals. However, there is ways to get all your money back from a term policy, okay? So that's important. So let's look again, recognize it. Temporary need, right? Those temporary needs are that loss of income. You could own a business and there's a period of time that you need to cover loans, or you have a mortgage, you have debt, you have different things specifically that you need to cover for a certain period of time in case you're not there for the income to pay for that debt or pay for that interest loans, okay? So basically, that's what term insurance is. Term insurance comes in a lot of different flavors, which we'll go over, but those are the temporary type of needs that come up with term insurance. So this is where the misunderstanding and miscommunication comes from. First of all, you've always heard, when they want to compare, life insurance is not an investment. So let's erase that immediately. So there's no comparison. There's no comparing life insurance to an investment one way or the other. Term insurance or whole life or IUL should never be compared to an investment. Okay? Life insurance is a unique asset that basically grows tax-free income. It grows tax-free liquidation for different needs. It could be critical illness, it could be chronic illness, it could be terminal illness, okay? And it can also create a generational wealth for people, okay? Wealthy people have used that forever. That's how they created their generational wealth. So the risks and needs are basically based on the human life value and the amount of future income that's at stake from that human life value. That's really what you're looking to protect, that period. Now, you want to live through that. That's what you want to do. Now, term comes in annual renewable, the most expensive type of term policy. It's the cheapest, but over the years, what'll happen over the years is it grows every single year. It gets more and more expensive. It just climbs the ladder. And this is what they use in universal life packages and IULs. They use annual renewable term. That is what you're paying for. So that increase, that cost of death benefit is going to increase every single year inside that type of term policy or a UL or an IUL. Now, it also comes in 5 years, 10 years, 15 years, 20 years, 25 years, 30 years, and even 40. Now, not all carriers cover all those different time frames. Many, you have to look around, but some carriers got 25 year terms. Some carriers got 30 and 40. Okay. Some carriers do the 10 and the 5. So those are not always common, but 10, 10, 15, 20, and 30 is pretty common for all carriers, all right? Now, I mentioned earlier that you can also devise a way so you build your term insurance to cover the need, to cover the time frame, and then after you survive, you can get all your money back. That's called return of premium. Now, that's a useful term product because it's going to be a little more expensive than a normal term product. It's going to be less expensive than a permanent product. It's going to fall a little in the middle, but basically you're creating a savings plan. Now, you're not getting any interest on the money, but again, you also, if you live, which is what you want to do, you're going to get all your money back. And that comes into a sizable chunk of money at the end of a term period. A lot of term policies, not all carriers again, they come with living benefits. Living benefits meaning that if you got a chronic illness or you got a critical illness or you got a terminal illness, there's a portion or even 100% of the death benefit that could be accelerated for that particular health need. Okay, and every carrier, there's differences. Okay, you're going to find that your carriers that are mutual and they carry whole life mutual policies with dividends, their term rates historically are going to be higher. They're going to charge more on term insurance. Okay, you're going to find carriers who have really a fairly limited or weak portfolio on permanent insurance, and they're going to be very aggressive and they're going to be very, very attractive term rates. And what you need to understand is why, as we said about investing, why term and invest the rest is a myth, is that 97% of all term policies never pay a death benefit. Let me repeat that. Only 3% of death benefits on term policies are ever paid out. So once you take a term policy, you have a 97% chance of surviving through that period of time. And this is why carriers like term insurance. They almost never have to pay a claim. That brings us back to why return of premium would be important. So what? Overpay a little and then live on that 97% and at the end get all your money back. That's the usefulness of return of premium when using term insurance. Okay. So basically, I wanted to get to the to our whole life sections, and I think what we're going to do is for time, I think what we'll do is we will pick that up. We'll pick that up a little later. Let's see. We got the needs. We got income producing years. We did that. And yes. So what I want to do is part two. In part two of this, I want to take some time with you and basically discuss the more sophisticated side of the life insurance time. Term insurance is pretty simply identified, pretty simply defined, but even it can get a little cloudy and a little dusty, and not everybody understands how to build it right and use it right. Okay, so that's very important. But then when we get to the permanent insurance, we're going to have permanent insurance. We're going to have a lot of different flavors. You got whole life. Okay, whole life is going to be in and of itself a fairly reasonable discussion. You got index universal life, very, very popular today, probably the most highest selling product in the industry. And then you've got universal life itself, okay? So that discussion ranges a little deeper. And what I want to do is make that part two with you. And I will see you on the second half of this. And thank you so much for your attention. I hope that this helps you get a better feel for why life insurance and why life insurance is important and how to use it properly, okay? So I will see you soon. Have a good one.